Hello, I'm Jessica Amir for the Finance News Network at Antares with Investment Analyst and Deputy Portfolio Manager of Large Caps, Jennifer Lamb. Jennifer, welcome to the network.
Thanks, Jessica. Thanks for having me.
Thanks for coming. So first up, just give us an introduction to yourself.
So I'm an investment analyst. I've been with Antares for 6 years now, and I cover a number of sectors, being agriculture, building materials, chemicals, gaming and utilities. And recently I became the Deputy Portfolio Manager for the large company strategy as well.
Nice. So zooming in on building materials, what are the real buzzwords in this space at the moment?
The key buzzword for the last few years for building materials, infrastructure. And if you pick up the newspaper recently, you see that governments keep announcing new projects. So over the past few years, there's been expectation that infrastructure, when it comes, would deliver strong volume growth, pricing power, strong earnings uplift, and also margin expansion for these building material stocks. Finally, that boom is here with us today. However, if you look at the earnings over the past 12 months, I'll say those lofty expectations on these factors have not been met and have disappointed. So it's a case of, yes, we have seen gains in volumes and revenue, but it has come with some pain as well for these companies.
So what are the real sources for disappointment?
One will be pricing power. So there's been a lot of hope that with these kind of levels of demand, these companies can price up. But unfortunately, that has not been the case, and it's a perennial issue with the industry that despite the demand, we have not seen solved. And also, construction activity levels being so strong in the East Coast of Australia, we've seen cost pressures. So labour costs going up, you're paying more for haulage, more overtime, and of course the topical item of energy. So gas, electricity, transport fuel. These guys are big users of energy, so like you and I, their energy bill is going up as well. So in a nutshell, you put that all together, earnings have gone up, but not to the extent hoped for.
So moving overseas now, Jen, what can you tell us about US infrastructure?
Similar story to Australia. So a lot of bullishness, expectation, but not yet fulfilled. So since Obama administration enacted the FAST Act in 2015, that is for infrastructure funding, there's been a lot of hope we'll see a wave of new infrastructure projects into the market for new bridges, new roads. However, again, that has not come to fruition yet, and volumes have been slower than expected. And one suspected driver of this is that government, at the government level, they don't have the resources, they don't have the experience of delivering these big projects. Hence, we are seeing delays at the pace of which these projects enter the market. So hopefully it's a question of when, not if, but patience is required.
So Jen, there's a lot to consider, but how do you deal with everything when forecasting companies' earnings?
My general starting point is to be conservative with my assumptions, and there's a case of then going out there talking to industry participants like your customers and your competitors to get their on the ground feel of what's going on and what the outlook is, and then using that feedback to check my assumptions to see if it's, well, it doesn't make sense. So very shortly I'll be going to the US for such a due diligence trip, so I'll be seeing home builders, industry bodies, construction material suppliers, and also like big box retailers. And the idea is to get the feedback of what they're seeing, what they expect, and then use that information to confirm my forecast or otherwise update them.
Well, we look forward to hearing your results. Jennifer Lamb, thank you so much.
Thanks for having me.
And thank you for watching.